Hey guys, Bitcoin USD. Yep, it was turned out a Monday slam down that's turned us over and brought us back into our low end of our range. You might know I came out with the Mike Novogratz. It's not a bottom mic. We're going down. I think there's a reasonable chance now, gentlemen and ladies, that we have indeed now put in our two inflection points, third and the third high and the third low, which means I can probably start scenario casting a target. By the way, targets are not like, hey, this is 100% guaranteed, this is going there. What it is it's geometric. It's determined by the price behavior. It ties into my method, and they're regularly consistently made, but they're regularly also missed. They're made to a higher degree than they missed, otherwise it wouldn't be very useful. But it's not a guarantee. If new, fresh momentum forces come into account while something is in a structured spill, it can lead to headwinds, preventing the eventual journey from being made. Also, certain setups can lead to overperformance. So sometimes I've had a target, for example, in gold, when we called gold for $1,300, it had never traded significantly over $1,008, and it was down at the 900s level, and it had recently dipped to 680. We got overperformance to 1900, and that then led to major underperformance for a sustained period, which we're still in today. So you can get overperformance, but that's usually the blow off moment. We got overperformance on Ethereum, or to the upside, on a major macro upside call that we made on Ethereum. That's over here. Another example in case. Let's get that chart up on the bigger time frame. That was it there. We said get in. You want to be long anywhere here. That's your stop. You can get in any point on this primer, or even at the latest 356, and you will run 585. As part of that larger move, you wound up, you got a little wind up on the way, you had confidence with the target, but then you went straight into another pattern. You can't see that very well. Let me stretch it out. You went straight into another pattern, and that gave another move. That gave you, hey, you can do it again. Keep on keeping on. 739, you can go all the way through to 1,100. When we got to 1,100, we blew off top highs. Well through the 1,100, you ended up 1.4. But what ends up happening is it leads to future underperformance once you've had successive overperformance, especially if you get it in a melt-up environment like you did here. What did we get? We came down, we bounced on our funnel support, and we rallied, and then we resisted in the first major inverted that gave us the target to the downside here in Ethereum. So you can understand how this works. Resisted, that became a head and shoulders. We made the downside target. Since then, we've been biasing short and trading short. We ran this funnel, which invalidated the original bullishness that led to the major blow off highs. And since then, our bias still remains to the bearish side. People that have criticized a lot, in fairness, some have also given great credit. The downside of this last target that we called Ethereum short, and we've been shorted, as I mentioned. When we were saying it's going to run 400, I mentioned people were saying you're crazy. Now they're saying $50 and $100, sub $100 for Ethereum. That's what happened. That target was made. You got another wind-up structure. That target was made. You got another structure, and I said again that final target on this is 169. If you closed your trade as you should and awaited for it to either give you another inverted or to rally, you would have locked in your profits at 169, where you could have been short like us on the break. We had a little micro fractal right in here. This is the value and power of a method. This is what our community spends their time doing, watching closely. You need many eyes on the front. You need to be looking at the market cap, the alt market cap, Bitcoin. You have to sometimes see the grind lines and other people's draws. You have to see the little inverted fractal there. They were saying you were going to spill. You could have been short from 283 to 169, guys, and got out when this thing then rallied all the way back to 228. And some of this I've YouTubed. Rest of it's been in our premium area for our premium clients. So this is what brings us up to Bitcoin and where we are now. This is inverted structure, and I feel reasonably confident, and I reiterate, on balance of probabilities, and in fact the grinding upside and the smackdown that we've just had now It shows further consistency as we are moving deeper into the pattern to the point where a triggering event is likely to occur, that the upside bullish moves are weaker and more faint, and that the absence of bid is sudden and violent, whilst also trading in between our soft floor $7,000 and the hard floor that has only just been spiked through temporarily for a very short period here and here. And we're leaning on, like knocking on the trapdoor. We're tapping on the bottom, looking for that trapdoor. So we remain bearish on Bitcoin and crypto as a whole. So when this sold off, it doesn't matter what Ethereum thought it was doing, and everybody thinking, hey, this is going to go up. If Bitcoin was on the 4 hour and it was in that shape, Ethereum itself ended up selling off too. Look at that. So I don't see in this market a major flippening ever being likely. And the most dominant crypto coin out there is Bitcoin. So you need to understand where your benchmark coin is going. If you know where your benchmark coin is going, you will, on balance of probabilities, in most instances, know very, very clearly where the rest of them are going to go. It's not a good time to be aggressive on Ethereum. So on that point, we've made this. My guys have been on this for a while. Some of them have been in earlier than this because we're discussing this all the time. But if we drop this down to around about a 30-minute, this is not good structure for Ethereum. There's likelihood of a left shoulder, higher head. You can see both came down to this blue line here. So the shouldering, the head in that capitulation, and a big right shoulder. You might get one more rally for a smaller second right shoulder, but you could just let go this level, and that's got targets down, back down over there. But this is still going to be depending on what Bitcoin does next. So let's get into the Bitcoin side of things. We traded short today, and we traded on an inverted HVF, and in fact I felt unlucky. I saw this level and I put a sell stop order. Next thing I knew, it came down, it filled me by quite a sizable sum and then pumped me into major negative equity with that pump, and I thought, damn, isn't that just the unluckiest thing? But actually we held it, we managed it, I stopped, and then it just rolled over and it spilled, and now it's made the geometric target to the downside here. Again, this is the natural geometry. This is a first inverted in a new setup, so it has power to overperform to the downside. Right down here, this green line is the triggering of that big macro pattern. That means game on, we're triggering. That is a live target. That's 3,000, I think it was just below 3,600, 3.5s, upper 90s, 3.595s is now a live potential target. You could get overperformance to it, you could not make it, but on balance of probabilities, we're biased short, and we will trade that, and we will probably take a little bit off at our interim and a little bit off at target, and I might, if it gets to target, and if it gets to target, I'll even leave a small amount on for overperformance. In other words, this is a bearish bias. So we think we've made our high 3 there. We think it's safe to have stops there, and in fact, with this inverted that was created and its midpoint and its targets generated, you could even be so cheeky to improvise and put stops even at those levels. So this is a little bit about what's going on inside our community, the market sniper, the sniper circle as it's known. This is the trade leaders, so I talk through this one mainly. This is our setups. Oh, it's logged me out. Isn't that good for security reasons? These are our setups. We have an entire way that each idea has to be shown, where all the detail is being done. Lots of interesting stocks. This is the leaders board where I can put quick chats. It's on a WhatsApp type functionality. There's an app as well. And you will have quite an amazing experience being in touch with your like-minded peers. And this is the blow-by-blow accounts for us on Bitcoin. That is, I think, the last chart prior to the eventual collapse, and that's where it actually tripped me in on the bottom of that wick and then came the way back up before rolling over. So you see it blow by blow with comments and webinars and all sorts of things. Anyway, that's not what I was looking to speak to you about. Bitcoin, in my view, for all of those that you out there on Freeview, is the following. it is bearish in my view, and I think Mike is incorrect, and I think this green line will roll. I respect him for putting out an opinion and making a call, and I will be incorrect many times and could even be incorrect now. But the balance of probabilities are in my favor at the moment, because we have a method and we know what we're looking for, and we keep getting the things we're looking for. And this is a low but significantly good enough relative high 3. So it's come up to just proportionately the right level for us. Bit of churn, and there could be further pain Bitcoin side and crypto generally on the breakout of this to the downside. Unfortunately, bears don't just end when you want them to end. People call bottoms many, many times. It's when the absolute last man is desperate and isn't a bull anymore, when the last bull has left town, that's when you know you got your bottom. And that's often the best time. And it's also the hardest trade to put on, because everybody's now talking about why every coin was so hyped and so overpumped. And everyone's now got the script of what they should have had 6-9 months ago. And that's just too late, because now there's overt negativism being posted in the market. So that was another performance, but I don't think it's going to pull back like the Ethereum pulled all the way back. It could go into a rising wedge. It could take out of this red line and put in a higher RH3, and we'd be inaccurate there. But just the nature of these very, very sudden bid absence and spills like this tells me this is a very skittish market. Skittish equals nervous equals bearish, guys. Skittish equals nervous equals bearish. That means absence of bid. The guys that have been doing the defending have been thinned out, in my view. Let's take it back up to that 4-hour view and show you. I spoke of the Dunkirk levels. I was using it as a narrative. The green zone when I was doing it from my surface and drawing with the pen. This is this here, and you just had a test there. Then you had a dip in the soft floor there and broke out. Then you dipped the soft floor, inverted head and shoulders on just running the hard floor, the all-time low, and our current low one for this structure. The selling has been coming down. Failure to make higher highs, consistently lower highs and weaker rallies. Where is the zip? There are less bulls left buying into the rally notion, and it's coming back harder and faster each time. And now you've just had this. So this is the big lean on the floor, and as I've said, I am bearish about this, and I would anticipate that on balance of probabilities there's a good chance you will see this level. That is big. It is big, chaps. You could have shorted at 6.5. This target is through 3.5 into the 3.5s. You're talking almost about 45% loss in value, almost being cut in half. A little bit of overperformance, and you're slicing the value of Bitcoin in half. That's like 20 grand down to 10 grand. Remember, it's a percentage. Log chart your scales. This is a big, big move. Just because it's $3,000, not $10,000. This in percentage terms is a big, big move, and you could overperform to the downside. Anyway, that's it. Just feeling slightly more confident, not because I want to be bullish and arrogant. This is about method, not about man. We're just getting further compliance to our expectations. We scenario casted this exact event. This is price behavior futurism. If you are a duck, you will make a noise that goes something like this: quack. If I hear quack, I am hearing that you are telling me you're a duck. So we've heard something go quack. It might have been someone standing on a rubber ball. Maybe we're mistaken, but now we're looking and we're going to feel for feathers. If we're seeing the feathers, then we're still thinking. Definitely another piece of information implying duck. Duck will be on the menu. And in this case, the menu is a bearish situation on Bitcoin. And we'll see, but I think we're not necessarily far away. It could extend for a week and you could have a primer, but my little experience and hunchy feeling about this is that there could be a soft rally here, which will be grinding and weak. Nothing really. You might say that was quite a strong candle over there, but nothing recently has been particularly strong and followed through. Yes, we've had a spike, but we haven't had strong follow through. So I'd expect grinding, weak behavior, and then a possible further search for the downside, and that could go straight into the triggering event. A bear flag, in other words, a channel rally here, or a rising wedge, and then smash down through the triggering event level. So I'm hoping some of you guys, if you do happen to make money on that, you will learn and see what you could have been. Just one instance, one trade that I'm taking you through, that you could have had access to the premium area and made more of that. It's amazing to me always. People will blow up accounts or lose 10 grand, 15 grand here, there, and 30 grand and hundreds of grands, as I've had many people do. But they'll balk at spending money at just getting a little bit better at trading, understanding a system, and being part of a community that is all similarly level trade or better, that will support you with reading the charts and the markets and can change the game. And it's not just what additional you make, it's what you will end up defending when you're wrong, when you think you've got certainty and it ends up doing something completely different. That is real value. Anyway, if you want to register for our webinars, go to themarketsniper.com. Otherwise, be careful out there. Trade small, trade safe, and keep the journey. Keep staying on your journey. It's about staying in the game and not being carried out. Okay, love you and leave you. Enjoy yourselves. Watch out, the crypto markets. Bear, growling bear. Bye for now.